What's good, y'all? This is your boy Jay Davari coming at y'all with another video, man. And honestly, in this video, man, I'm gonna be basically giving my breakdown of gold and what I think gold is gonna do for the week. You know what I'm saying? As you can see, I already got some levels and stuff marked up over here, so I kind of been already planning and forecasting what I'm, basically wherever gold goes. These are areas where like I'm looking for it to react on and possibly looking for possible entries. So, with that being said, I ask you guys please subscribe to the video and like the video, and also leave a comment down below in the comment section. Just to give me some feedback or whatever, or just talk to me, say what's up. You know what I mean? But yeah, man. Here we go. Here we are. As you can see, we finally today on Tuesday, the 2nd of May, the beginning of the second day in the beginning of May. Right, we finally broke above this 2 week range that we've been in, that we were in from Monday, April 17th, from the high of April 17th of 2023 to the low of Wednesday, April 19th, 2023. Right. So for the past 2 weeks, we were in this range right here. Well, you can say almost going on 3 weeks, we were in this range right here. So if I did want to trade in this, I probably could have, but I would have been probably taking like smaller setups. Sorry about that. People being rude out here, but I probably would have been taking like smaller risk to reward setups, probably like 1-to-1s or like strictly 1-to-2s. You know what I mean? But with that being said, y'all, yeah, we finally on Tuesday of today we finally went ahead and broke above this 2 week high that formed 2 weeks ago. And so now basically I'm looking to see if gold is going to trade up into this 1 hour fair value gap that's resting up here. As you can see, here we go, we have this 1 hour fair value gap right here. So I'm really anticipating or looking to see if it's going to trade here. If it trades here, I may initially go short and then try to target like whatever short-term high that's resting here, or like short-term low that's resting here, short-term higher low that may be resting, depending on like what type of price action we see running up into here. And I'll be looking to target say a higher low that's resting over here to the left, right? So I'm gonna wait to see my trade setup. If we get to here, wait to see like my trade setup for like a sell, for like a sell-in entry, and then yeah, just that's currently what I'm waiting for right now, what I'm forecasting, because we did take the liquidity of this high right here. So if we're gonna see any reaction to the downside, oh crap, my bad. If we see any initial reaction to the downside, because don't get me twisted, like it can still happen here and say come back down into like the breaker block here, and also too, this is a large fair value gap right here. And honestly, I can like take the say consequent encroachment from the high to the low of the open and the close of this candle right here, and then we have the consequent encroachment from the high to the low. Alright, there we go. So we're resting just a little shortly below here. Then also there's another consequent encroachment that I have resting right here. So with that being said, I'm not even gonna worry about say marking this one up per se. I'm pretty sure if I were to actually take the full range of the candle, you see we'll get a consequent encroachment level that's actually resting within the breaker block that's right here, or the buy side breaker block that's right here. If we actually get the full range of the entire candle, right, this entire long bullish candle from like the open to the actual high that was made, right, instead of using the open and the close, we're getting like the entire range. So I actually wouldn't mind going ahead and marking that. Actually, I'm just gonna do this, mark that right there, mark it as a consequent encroachment, right, or the midpoint between this area. Or matter of fact, I'm gonna just go ahead, I'm gonna actually use this one as equilibrium. Right, so we're gonna use this one as equilibrium. To the right. Equilibrium on the 1 hour. Equilibrium on the 1 hour. Alright. And then also too, another thing that we got going on this week, with it being the first week, or the first week of the month, right? In May, we have NFP. NFP is always on the first Friday of every month. So we have NFP, as you can see right here, non-farm payroll, and then unemployment rates at 8:30 a.m. on Friday. I normally don't trade on Friday anyway, so I stay away from NFP. That's what ICT teaches us to do. And as you can see, Wednesday, tomorrow, right? FOMC and the federal funds rate, otherwise known as interest rates. So why I'm trading gold at this point in time is because normally when interest rates, gold has an inverse correlation with interest rates. So as interest rates are rising, gold tends to go up in value. As interest rates are actually lowering, gold tends to fall off in value, right? Because gold is used as a hedge against inflation. If we have low interest rates, then people are going to be more incentivized to actually use debt to acquire assets and invest it instead of using actual cash or having actual cash assets, right? So when we see interest rates coming down, normally gold has the opposite effect of say going down from a debt to hedge, like a debt to hedge, the hedging, kind of like a debt to actual cash value type standpoint, right? But as interest rates are going up, gold actually goes up in value, because when interest rates go up, money is actually more expensive to borrow. So people are less incentivized to use debt because they're going to be paying high interest on the debt that they're securing. So instead of doing that, they rather take their money and invest it into, say, assets, cash assets, i.e. gold, right? A hedge against inflation. They'd rather go take their money and invest it into the gold market, where gold is going to be seen appreciating, because people are going to be putting their money into more, say, cash on hand type of investments. Depending on how you invest in real estate, some people use cash to invest in real estate. People go to precious metals. Even the luxury goods market right now is actually pretty booming, right? I saw that the CEO of Louis Vuitton actually became the richest man in the world over Elon, because the luxury goods market is still surprisingly taking off right now. But yeah, basically with all that being said, that's why I'm trading gold right now. And basically with the federal funds rate, they're actually projected to raise interest rates again. And this is why I'm anticipating, say, higher prices on gold initially for tomorrow. So as far as today, I think we've pushed up as high as we're gonna go today, right? As far as Tuesday, the second goes, because normally what you see on the day of say a major news event, you normally see a large move happen the day before. So it can be in this case Tuesday, a rally up, and then we see a rally down, right, to finish out the rest of the day and probably form a new low, or form the first low of the day, probably come back down here and tap into this area. And then when FOMC comes out, probably that's when we'll finally see say that push higher and then possibly come into this level right here and then have a reaction. Or we could just tonight continue higher, tap into the level, and then say around, so we're gonna have 10 a.m., 8:15. So we've got a couple of high impact news events coming out before 2 o'clock, before they announce the federal funds rate, right? So as you can see, if that, because one or two things can happen. We can come down here for the remainder of the night, come down here, tap into this area, and then head higher, right? Or we can continue to head higher as of right now. At this point in time, continue to head higher, go ahead and tap into this area, saying London session, right? And then New York, around that 8:15, 8:30, 10 a.m. Time frame to come down, or time point of reference. We probably see gold get impacted negatively, right? So we start heading lower, and then around the federal funds rate, we may see an initial move lower, probably tap into, like, say, some liquidity that's resting here, and then ultimately, like, when all of that gets factored in, we may then start to see higher prices, right? Heading higher, right? Eventually taking out the daily buy side liquidity that's resting right here, right? I don't see them taking out the sell side that's resting here, or taking out the sell side that's resting here as of yet, or at least not this week, right? I think I'm just going off of what I think is going to happen for this week, but that's my idea, and these are the areas that I have marked out, of basically these are areas of key interest that I'm looking for. Even right now, around like 9 o'clock, I could probably get in or find a move or find a trade position, and just trade in like this little small range right here on the 1 hour time frame. So I could possibly just like trade within this small little hourly range that's resting right here. Probably find like a little small trade and not risk too much, because I can only trade in the Asian session because I work I work at the post office. So yeah, as of right now, I kind of have to stick to trading Asian session. When I can, on the days I'm off, I actually do trade the New York session. So but yeah, I can possibly find, like, say, a little small trade idea in this hourly range right here, just from the low to the high right here, right? And yeah, I could find a trade in here tonight. But other than that, tomorrow, these are the key areas of interest I'm anticipating gold to hit, and we'll see what type of reactions we have in these areas. If things pans out, if I was able to trade this, actually, I would just be waiting to see what happens around that time. But yeah, so y'all have it, man. You know what I mean? That's my trade break, or that's my analysis on gold, and that's why I think gold is going to be heading for this week. Like I said, we have Fed funds rate, right? So interest rates. This is really what's going to be affecting all markets, not just gold, but even the markets like the US 30, S&P, and the NAS 100. You know what I mean? Probably even stocks over here, right? Interest rates is really gonna be, say, that market rocker come tomorrow. So if you're gonna be trading tomorrow, definitely do be careful, because a lot of times during these events, there's a lot of manual interventions, and yeah, at this point at 2 o'clock p.m., come 2 p.m., nobody will be allowed to make money. Like, just sit back. ICT tells us to wait 30 minutes, so around 2:30, anytime after 2:30, that's when you can see, okay, what do they do, what's left, are there any moves for me to capitalize on from the past 30 minutes, you know what I mean? So yeah, that's how we're gonna play it, y'all. So then just keep in mind, Friday we got non-farm payroll, kind of a very volatile week that's going on this week. So definitely manage your risk properly, minimize risk if you can. I'm normally only trading like with 0.5%, so half of 1%. That's what I feel comfortable with at the time. I'm using my funded account from the funded trader. So yeah, with that being said, y'all, I'm going to wrap the video up here. Hope it was a pretty quick one. But yeah, if you guys enjoyed the video, please subscribe and like the video. And yeah, I'll see y'all in the next one, man. Peace out.